everyone, and welcome back to the channel. In this video, if you're going to buy a house, a flat, a studio flat, any property of any kind, watch this video. We're going to tell you about our story of how we bought our house and paid it off early, and what things to avoid and what things to do before you even look at the property. So you're on the market, you've got your money, you've got your deposit, you want to buy a property, but before you do, stop, don't do it. Listen to this video first. So I'm going to tell you about our property, which we got out in 2007, 2008 on a 25-year mortgage at a rate of 5.75%. And I'm going to talk to you about how much the mortgage cost, what kind of mortgage it was, how we paid it off early and everything else. So let's go back. 2007, I was leaving the army and I needed to get a house. So I looked around. But before I looked at a house, I contacted a mortgage company and I said, how much can I get for a maximum mortgage so I know what price properties to look at? And they turned around and said, well, this is back in the time when they did 100% mortgages, big mistake. They turned around and said, well, the maximum we can loan you is £88,000 on a mortgage. But if we make it 100% mortgage, we can put a loan on top of that of £16,000 at a rate of 5.75%. So that was the maximum I could borrow was £104,000. I then said, great, I've got £104,000 to get. I was in lots of debt at the time, but I didn't care because I didn't want to rent and I wanted a property. So I started looking at houses, but I didn't look at ones for £104,000. I looked at this one. We currently live in, own and have paid off our 2-bedroom end terrace masonette here in sunny Southampton. Okay, back in 2007, it was up for sale for £115,000. So I looked at the property with the estate agent and I looked at the property and I said, how much do you want for it? They went 115. So I went in at 95 grand. They said no. I then went up to 98 grand. They said no. I said 100 grand. They said no. Now I know I've only got £104,000 to buy. I can't borrow any more than that. I was already in debt and it was 100% mortgage. So I rang the estate agent up. I said, look, my final offer is £104,000. They either want to sell the place or they don't. 2 minutes later, I got a phone call back saying they've accepted my offer. So that was fantastic. They accepted the offer and I got 11 grand off the asking price. Winner, winner, chicken dinner. Now this is back in 2007, like I say, when it was 100% mortgages with a company called Northern Rock. And if you don't know anything about Northern Rock, I'm going to tell you now. So 2007, we got the house for £104,000. 6 months later, Northern Rock went bust. My mortgage company, they went bust. They'd given out too much lending and people couldn't pay it back. They were defaulting on their mortgages, and this was just before the big crash, financial crash of 2008. The bubble went pop, yeah? What that meant for me was the property that I just got for £104,000, that was originally for £115,000, was now worth £88,000. You got it. I was in negative equity and running around like a headless chicken. What have I done? What am I going to do? Now, if you keep the property, it's not a problem because properties go back up in value and you're fine. But for any reason, once that had gone down to £88,000, for any reason, if I had to sell that property, I would have sold it, all the money would have gone to the mortgage company and I would have been, what, 16 to 20 grand in debt with no house. So it was a bad time. Now, because the mortgage company went bust, they got bought out by a government company, Whistletree, part of the Lloyds Group. So I had no choice in who my mortgage was with, and all of Northern Rock's mortgages went to a company called Whistletree. They put it up at a higher percentage rate, so I was paying more, this and that, and it was an absolute nightmare. And I couldn't remortgage due to personal circumstances, but I could keep my original mortgage and keep paying. So I was self-employed. I've just signed up for a house for £104,000, 100% mortgage, and now it's worth 88 grand. What did I do? put my nose to the grindstone and worked myself out of the situation while the property market recovered. Now you need to bear this in mind. If you're going to buy a property, can you keep going with it if there's financial crises in the water? Can you keep that roof over your head, and don't take on too much of a mortgage payment when you're taking out a property? It could mean the difference between you keeping that property or being forced to sell. And if you're forced to sell, I guarantee you 9 times out of 10 you're going to make a loss. So a bit about now how I started paying for this mortgage. So I was a single guy at the time. I got this house and I said, right, this is a lot of money, because I was paying about £700 a month at the time, which for me back in 2007 was a lot of money. I just left the army, I was self-employed, I was a DJ and a singer. And I was bringing enough money in just about to pay it, but I had no money for anything else. So I thought, right, I'm going to get lodgers. So I turned the living room into my bedroom that I lived in. My whole room in the house was the living room, which was locked, and that was my bedroom and living room. And then the 2 top bedrooms I rented out for £100 a week each to tenants that wanted to live there, all bills included. Okay, that earned me £800 a month, which paid my mortgage plus a little extra on the bills for electric and everything they were using. Job's a good one. And that's how I continued to pay the mortgage on my property month in, month out, while still having enough money and keeping a roof over my head. And this got me through when the property went from negative equity to positive equity, and I was making a profit. Now with the property, when I lived in it, I did the absolute basic to it. I put a bit of paint on the walls, changed a few carpets, made sure everything that was there was worked. I didn't get a new kitchen, bathroom or anything because I didn't want the extra expense. I couldn't afford it, okay? So I kept the property to a livable standard, but very, very basic. The lodgers were happy, I was happy, money was coming in, the mortgages was getting paid, and the house went up in value. I still live in this house to this day, and I'm filming in this house right now. And later on in this video, I'm going to tell you what time frame we paid it off in and how we did that. So as time went on, 10 years went past, 12 years went past, and my financial situation changed. I was earning more money now, and the mortgage was getting lower and lower and lower because my loan to value was a bigger distance apart. I wasn't borrowing 100% now. The property had gone up in value, and now anytime I wanted to remortgage or stuff like that, the property loan to value is, let's say I needed to borrow 50% of what the property is worth. So if the property is worth 100 grand, I needed 50 grand to pay off the mortgage. Okay, things were looking up, and that's when I started overpaying the mortgage. Now, when I overpaid the mortgage, me and my wife, we moved in together in this house, got rid of all the lodgers, completely gutted it out, cleaned it up, made it a family home, not just a bolt hole for me to sleep in and get it paid off by lodgers. Okay, we made it a family home, and then we decided to start overpaying our mortgage by £500 a month. When we did this, our original mortgage payment had already gone down from £700 a month to around about £500. So we were paying £500 a month mortgage plus £500 a month overpayment. Overpaying our mortgage by £500 a month, this dramatically paid off the mortgage faster. So let's say I was only paying £500 a month mortgage payment. Let's say £400 of that actually came off the money I owed, and £100 was interest. Well, now we were paying that 500 plus another 500, so that's 1,000. So every month that was going past, every £1,000 we spent on our property, only £100 was interest. And every month that went past, the next lot of interest was like £99 interest. Next lot was £98 interest. And we reduced our mortgage rate from the 5.75 to a 2.8 fixed rate for 5 years. Things are going well. Now, before I go on any further, all these things I want you to take in mind before you purchase a property. If that property goes down in value after you've took your mortgage off, and your mortgage goes up because financial things may go array, have you got enough money left in your budget to cover the extra money on the interest on the payments? Have you got enough money to continue paying that mortgage until that mortgage comes down and down and down, and the property price goes back up, which is exactly what happened to us, to see you through and keep that roof over your head? If yes, then go for your property, okay? And this is how we carried on paying it off. So we started off our overpaying by £500 a month on top of the £500 a month mortgage payment. And in the space of about a year to a year and a half, we cleared an additional 10 grand off our mortgage. And our mortgage was down to, it had gone from 60 odd down to 48. And then we did it for another year after that. And it was 48 down to 38. And, you know, you got to be careful when you overpay, because the mortgage companies, bless them, will let you only pay off a certain amount of your mortgage each month before they start chucking in penalties. So before you do big lump sums of money paying off your mortgage, if you can do that, or you up your monthly payment, ring up the mortgage company and say, what's the maximum I'm allowed to pay off in this year, this tax year, without getting charged? And then find out how much that is. So if they say it's £2,400 is the maximum overpayment you can make, then just pay an extra £200 on your mortgage until you get to your next tax year, then ask them the same question again. Alternatively, you can wait until you come out of your fixed rate for your mortgage, which these rules apply to, and once you're on a variable rate, you can pay as much of as you want whenever you like. So let's recap. In 2007, I got this house on a 25-year mortgage, fixed rate 5.75%. It was up for 115 grand and I got it for 104. It went down to negative equity within 6 months to 88,000 because the financial crisis happened in 2008. I dug down, I got lodgers to help pay the mortgage and keep myself afloat until I was in a better financial position. Then we started overpaying the mortgage once we moved in as a family, and continued to overpay and overpay and overpay. Now remember, that mortgage was a 25-year mortgage. We paid that mortgage off 4 months ago, and that's 17 years after I signed on a dotted line for this house. So we paid off a 25-year mortgage in 17 years. Now, if we can do that, you can do that. But what you've got to do is, you've got to get your property for the right price. Yeah, get your property for the right price. Be realistic with how much you can afford. Even if they're saying they'll lend you 200-300 grand. Yeah, you've got to think of affordability, because what's the point in getting a house you can't really afford? Be honest with that. Look at ways. Could you get a lodger to help you with the mortgage if you needed to? Could you pay for the house if you hit hard times? Maybe have an insurance backed up to cover your mortgage payments if you're out of work. Consider all these things before you get a property. My advice for anyone who wants to buy their first property: get your feet firmly on the ground, get your head out of the clouds. It's an exciting time and you're allowed to be excited. Well done, you're in a position where you can get a house. I want nothing but the best for you. This channel is all about helping you. But what I want you to do, instead of just going for that 2-3 bedroom detached house in a really nice area with a big garage that's going to cost you over 300 grand, don't do it. Start off your property journey with, say, a 1-bedroom flat if you can live and that suits your needs. Obviously, this isn't going to work if you've got kids and stuff, but if you're a couple or a single person, start off with a 1-bedroom flat. Get some experience behind you on paying a mortgage and the pressure you have on you. When you wake up in the morning, there's a certain amount of pressure when you've got a mortgage. Because when you buy a house, you're excited. You're like, yes, we've got the mortgage. Yes, we can get a house. That's all exciting. That's all good stuff. But it all falls to pot after a couple of months when that excitement wears off and the reality sets in. And if you can't afford that place comfortably with your standard of living staying up there where you want it to be, it starts becoming miserable, because the realization kicks in that you can't actually afford this place. And if anything happens to you work-wise or anything else, which nobody knows what's going to happen, you know, the chances are you're going to lose it. So always start small if you can. Always try and get the best deal you can. Never just go and look at a property and ask full price. Knock 10% off straight away and work back towards the original price and get as much off as possible. This way you guarantee. So what can you expect your property to be worth 10, 17 years down the line. I didn't have a clue how much this property would be worth. Like I said, when I went to buy the property, it was up for £115,000. I got it for £104,000 because I negotiated hard because I had to, because I couldn't afford any more. It then dropped to £88,000. So what's this property worth 17 years later, after going from 115 to 104 to 88? What is this property worth now using Zoopla? Well, this property is now worth £250,000. £250,000 is what this property is worth, and it's bought and paid for. It's ours. We own it. We don't have to pay rent. We don't have to pay a mortgage or anything, and it's an amazing feeling. Has it been easy paying off a mortgage? No, it has been hard work, and that's hard work with a property that you took lending out for 104 grand at £700 a month initially. I could not contemplate getting a mortgage for £200,000-300,000, which I know people that are doing this, and they're taking it out over 35 years. And I said, what's your mortgage payment going to be? And they said £1,500 a month, every month for 35 years. And I thought, good luck to your brother, good luck to your sister, because I just couldn't do it. And I don't want you to do it first. If you're going to get a property, start small. Something you like, something that's functional for you and your family. Get the best deal on it. Look at all the areas around the area that you're looking. So in Southampton, for example, you've got Southampton city centre. But we live right on the outskirts, basically next to Eastleigh and Netley. Okay? And we're in a country part of Southampton and we love it. We walk through the woods every day and we're by the beach. Look what's around you. Look what you actually want from a property. Don't bite off more than you can chew. Be humble and be practical and be honest with yourself of how much you're going to borrow and can you afford it. Always start off small. If after a couple of years that one bedroom flat's not big enough for you, but you're used to paying off a mortgage now, you're used to that responsibility, that pressure, and you yearn for the challenge of a bigger place and you can afford more, you go for it. Well done. If you can afford to upgrade to a 2-bedroom house or a 3-bedroom house, you go for it. You've got the experience after a couple of years and it's not going to be so daunting for you. And hopefully your property would have gone up so much in value that you don't even have to worry about it. You could sell the first property, pull the equity out of it, put that as a big deposit for a bigger place and have the same mortgage you had in the first place. Okay? So good luck to you. Enjoyed watching this video. For anyone who's new to us, we are Juicy Killer Monster, previously known as Justin Scrap Metal Recovery. We film everything, anything to help you guys with any questions you need answered, any spin we can put on things with our own personal experience or researching for you. This is the kind of channel we are. If you want to laugh in most mornings, have a look at our shorts reel. It's pure comedy, nothing serious, just to give you a big smile in the morning, because I know how hard life can be. Yeah, I've lived it for 42 years. And for the serious stuff, we put good long form videos out about property, car boot selling, reselling, charity shops, scrap metal. We even walk our dog through the woods, we live stream, and we would like to connect with you guys. And please comment and be kind on whatever you liked in the video and how we can improve on things. Thank you very much for watching. Take care and good luck on your property search and good luck in life. Take care, guys. Bye.